I mean, they're basically saying that, initiating here, Tesla stands out above all the picks in the auto space. Tesla is well positioned in both worlds, right? From a cash point of view, they have a huge cash war chest that they built up over the years. They're able to spend on their new cars there. And then also from a long-term kind of their EV and software prowess, they have sort of the ability to, they're the only company that has been mass-produced EVs, right? Like on a huge scale. And they have the sort of the software kind of backbone that they've been developing for many years. So those are two kind of bull cases for Tesla right here, right now.
In this video, another day of green. Tesla stock has now almost doubled in 2023. And it's, let me just check here. It's February. Super shocking. Zero people saw that coming. The people who control Biden have accidentally tagged both Tesla and Elon Musk in a tweet, which implies that Mary didn't in fact lead and doesn't in fact matter. I'm sure the Ministry of Truth can make a correction to that tweet soon. Plus, Wall Street continues to slowly begin to start to understand the opportunity that Tesla represents, and two long-term Tesla fudsters embarrass themselves once again on CNBC. Now, you guys may have noticed a few ropes hanging around my windows. Just for the record, I'm hosting an epic bondage party as we speak. Guests are beginning to arrive, so there may be a few interruptions during today's video, and I guess I'll have to apologize in advance. If you'd like exclusive access to the live stream of this debaucherous event, head over to Patreon. You'll definitely be able to access that there. Hang on. Sorry, the Ministry of Truth is telling me I'm not allowed to say things that aren't true just to get people to join Patreon, because that would be fraud. And I'm no longer allowed to use the Trevor Milton playbook. Okay, cool. Yeah, so don't join Patreon. No bondage videos available, just 290 other exclusive videos that won't make you vomit in your mouth. First order of business today, more green. Tesla stock and my trusty AG1. Year to date, Tesla stock now up almost 100%. That's on the back of a move today of just over 2%. Tesla stock just in the last month alone now up over 60%. Still, however, down more than 30% over the last 12 months. Despite near flawless execution, the so-called competition stumbling, embarrassing themselves, recalling vehicles, delaying production, pushing plans out into the future. You know, the usual. Didn't make sense, still doesn't make sense, just putting that on the record. Let me know in the comments below if anyone was able to take advantage of this major discount on Tesla stock over the last few months. I unfortunately wasn't, because I panic sold my Tesla stock near 2-year lows in the hopes that I could buy back under $69 per share, because I know how to do technical analysis and the chart told me the stock was going lower. So still waiting for that dip below $69 per share, but don't worry, it's definitely going to happen. The chart's never wrong.
Tesla shares rising again today and now up more than 70% on the year. Today's boost coming from a Barclays note, the firm initiating coverage on Tesla with an overweight rating and a $275 price target. What's the case here from Barclays on Tesla?
I mean, they're basically saying that, initiating here, Tesla stands out above all the picks in the auto space, which is kind of a big call, I think, from their point of view. Talking about how there's two clocks, a two-clock framework, right? So there's the first clock, which is the near term, that's cyclical, the economy, spending on inventory and cars and parts, things like that. And then the far term, which is secular changes, the big transformation in EVs, the huge sort of rollout, how much it's going to cost, how the society changes, right? So Dan Levy, the analyst there, says that Tesla is well positioned in both worlds, right? From a cash point of view, they have a huge cash war chest that they built up over the years. They're able to spend on their new cars there. And then also from a long-term kind of their EV and software prowess, they have sort of the ability to, they're the only company that has been mass-produced EVs, right? Like on a huge scale. And they have the sort of the software kind of backbone that they've been developing for many years. So those are two kind of bull cases for Tesla right here, right now.
It's hard to argue with any of that. Good news, more of Wall Street starting to wake up to Tesla's truly unassailable lead and the inevitability of the EV transition.
Just real quick, Ford and GM, equal weight. He likes them both. He likes GM a bit more than Ford because of their kind of progress on EVs, execution, and the AV cruise technology.
That really surprised me. Now, we saw a bad quarter from Ford, but they really came out of the gate so strong in the EV space, in particular with the Ford F-150. To hear Barclays choose GM over Ford in that space was a big surprise. Was it something beyond the production issues we've heard of?
Just when you thought Wall Street was starting to get it, we've just heard that these morons are more bullish on government motors than Ford. One step at a time, I guess.
I think it's because, and I didn't see this in the note, but I think it's because GM has their sort of rollout with the Ultium platform that you can make multiple cars off of, whereas the Mustang Mach-E, the Lightning all use different platforms. It costs more money to develop these things. You have one-off sort of platforms lying around. It's easier to kind of use one and then scale it to multiple different cars.
When is that Silverado out?
this
EV.
year, mid this year. And the cheaper one will come out later this year, too.
Okay.
So mid this year, the
Excited
expensive
about that one?
I really want to see more and learn more about it. You know I love the F-150
You
light.
do love the F-150. What also struck me about this note was a call here that we're seeing on Rivian. Lots of questions about what the future of Rivian looks like.
Well, in my extremely uninformed opinion, I think the future of Rivian looks like struggling, raising more capital, diluting shareholders, panicking, struggling, and then filing for bankruptcy. I hope I'm wrong, but I wouldn't be counting on it.
They actually said that it might be best position here just in terms of following in Tesla's footsteps, which we're seeing that reflected in the stock price today.
Yeah, a really nice move for Rivian today. I mean, almost 9% there. Talking about how Rivian sort of is, they don't want to say that they're the next Tesla, but they're sort of the only pure play EV that could possibly be the next Tesla because of the fact that they have like sort of a moat there with their products, right? Like no one else is making adventure vehicles. They have their own sort of technology. They're really kind of cornering the market in that space.
In fairness, this is absolutely true. There's no US electric pickup trucks available other than the fake pickup truck, aka the Hummer EV. Shout out to my friend on the window. We're just going to keep rolling. And in addition to that, we have the Ford F-150 Lightning, which production has just been halted on. Apparently there's some battery issues, so apparently production is hard. And you've got the Rivian, which isn't a work truck. So at this point in time, it's a wide open marketplace. The challenge for Rivian is that their target demographic isn't a traditional pickup truck buyer. It isn't those who need a pickup truck to actually do pickup truck things. So there's a limit to the size of their potential market. That being said, Tesla will not be entering this marketplace. So if Rivian can do a good job, they can potentially have this segment to their own. Problem is, they need to ramp up high volume production of their vehicles profitably and not go bankrupt in the process. If they can do that, they've got this tiny little niche to themselves. But it's going to be quite the uphill battle.
And they're pure play EV, so that's sort of what Dan is saying. Levy's saying that this is sort of the best positioned automaker to be the next Tesla, not that they're saying that they might be the next Tesla.
So spoiler alert, Tesla is the next Tesla. Time to hear from everybody's favorite DMF. I'll let you figure out that acronym.
The Investor Day is coming up. And so, you know, the surge has got us thinking that it'd be a perfect time for a trade school, Dan, because you have been vocal. You've been short Tesla. And so we want to ask you a couple of questions that we always get from our viewers. First of all, when do you know when you cut your losses?
Well, it all depends. I mean, like for me, like right here, I have a lot of conviction about the fundamental view of this. And to Karen's point, like, did it deserve to be 102? I don't know. But I started shorting it over the summer at 300. Okay. So like, and covered it at 200. And I was actually very clear about that. And it dropped off the face of the earth. It went from 200 to 100 in a month. Okay. So yes, it overshot to the downside. For me right now, I started putting a short out, but doing it through long TSLQ. That is an inverse ETF that tracks the performance of the underlying stock when the stock got back towards 160, okay, had that huge rally. I've been averaging into it. So I just want to make a couple points about, listen, most viewers right here, most retail investors should never short a stock. You know why? When you buy a stock, it can go to zero. If you short a stock, it can go to infinity, all right? That's not a great feeling. The other aspect of shorting a stock is that it takes a lot of margin in your account to do that. So when I usually use short exposure, I do it through puts, okay? I buy a put or a put spread or something like that. I'm defining my risk. But in a case like Tesla right here, if I look at the stock at 209, the at-the-money straddle, looking out a month, okay, that is the call premium and the put premium. I know that sounds, 530 options action a little bit.
Right.
That is $35. That is 16% of the stock price. That is the implied move between now and March 17th. That's crazy. If you're just paying that premium and the stock goes nowhere, you lose that, okay, on one side of it. That's about 8% in either direction. So how am I trading this? How am I risk managing it?
So how is Dan trading this? Keyword trading. Answer, based on his emotions and his self-hatred projected outward onto Elon Musk. And as for risk mitigation, Dan definitely doesn't need to worry about that. As long as he remains the laughing stock of the finance media, he'll continue to have a job on CNBC and he can fuel his losses shorting Tesla stock with his income. Oh, that was really rude, wasn't it? Sorry. Over to you, Dan.
Why do I like this TSLQ? Because I'm long something. Most investors know how to be long something. They know how to manage their risk when they're long something. That's my view on this TSLQ. I've been averaging in, okay? And so right now, I'm down about 10% on my average. That's not great. But like, I know what I think I'm doing here, and I'm not going to let this thing get out of control here. Is there ever a stock that could get out of control? It's this one. It's the upside and the downside. But that's why I'm not using options. The premiums don't make any sense right here. I'm using this reverse or inverse ETF. I can risk manage it a lot better than being short the stock or being long puts.
You have been short in the past, Tim.
Yeah.
Tesla.
No, this
is it tempting at this point with this run? since January?
To me, on valuation, look, the reasons that I was in this trade on the short side, and I was doing it mostly through options, in fact, almost exclusively, was there was a balance sheet issue back then. I thought there was balance sheet, I thought there was absolutely a question about the.
For those of you who recall, this is Tim, as in, you still short Tim? Now, the truth is, at least in my opinion, given the fact that Tim Seymour, and I forget the guy's name, has publicly tweeted, referring to Tesla retail investors as Lemmings, praised Gordon Johnson for doing God's work, words to that effect. I personally believe the reason that Tim Seeless has been shorting Tesla stock is also pure emotion, obviously projecting how he feels about himself out onto Elon Musk. Notice his reasons for shorting. Well, the reason I initially began shorting was there was there was some balance sheet issues and literally not kidding. Go listen again. The guy doesn't sound comfortable. It's almost like he doesn't actually have any valid reasons for shorting Tesla, but he's just trying to conjure up some in real time. Now, I could be misinterpreting this, but I'm not going to hold back what I'm thinking.
The continuation of that balance sheet. I think there was a lot of things related to just the company's ability to stay in business that were part of it. Right. That's not a question, not even a question. Then it became a question of valuation. Look, on valuation, if you can get out to 25, you can make this an 18 times multiple for a company that's not bullish. If anything, I'm bearish on Tesla here, but it's a very different story for me to be playing from the short side.
Right.
All right, guys, so I've just seen a few seconds ahead, and it's so incredibly hilarious and embarrassing. I've rewound. I just want to warn you, pay very close attention. This DMF is getting exposed for what he is. He's about to be asked a very direct question. Instead of answering the question, we're going to see some Neo in the Matrix bullet time question dodging and misdirection, which may work if this guy was talking to an infant, but he's not. So, over to you, DMF.
Just quickly, if Tesla, a TSLQ, where would it get to zero? How much does the stock have to move
I don't know.
to get to
Listen,
zero?
this is what we spend a lot of time talking about this stuff. This is like one position that I have. Is it not feel great right now being wrong? Of course not. But like at the end of the day, I mean, I'll just say this. This is one thing, and I think this is kind of the thing that investors are not pricing right now. I don't think things get better in 2023 between us and China. When you think about this company's reliance on China from a manufacturing standpoint, access to rare earth materials to make their batteries and access to their consumer, they have less than 10% market share of EVs over there. That quarter was not good in China. If there's any hiccups between us, and China that get worse from here, this is a problem for them. I think 40% of their sales come from China. This is kind of why I'm in this trade right now, and I think this plays out over the next few months.
This may be one of the greatest ever examples of a dimwit who has no idea why he's investing. By the way, Dan, it's emotions, not reason. That's what's clouding your judgment. And when asked a very simple question, after all, he's just described how he's betting against Tesla. I'm investing in this particular fund, the TLSQ fund. Karen asks a very reasonable question. How high would Tesla need to go for you to reach zero to lose your entire investment in this fund that's betting against Tesla? And in response, Dan just vomits up a bunch of FUD and emotional reasons as to why Tesla doesn't look very good. Oh no, the relationship with China, instead of answering the question. I mean, Danny's fooling literally no one other than himself. It's really sad to see.
You can't talk Twitter, of course, without discussing Tesla also these days. The EV giant's recent stock surge, no doubt alleviating some of the pressure on Elon Musk to quickly appoint a successor at Twitter. The latest development at Tesla, by the way, it has struck a deal with the White House to open its supercharger network to other vehicles. It will also double the number of chargers in the United States. This is part of a bigger plan by the White House to just increase the charger network as it pushes towards a more electric future. But this is interesting at Tesla because most of its chargers have been exclusive to Teslas. And so this is pretty significant. If you have an electric vehicle of any kind, you're going to have more places to charge it.
This is, of course, good to see. But look, the other side of it, you could roll up there with another EV model out of a GM and Ford, see these Tesla signs, and maybe you're unhappy with your EV maker from these companies. You know what? Maybe I should give Tesla a play here for some reason. Maybe my next car should be a Tesla. So there's a little bit of marketing here too as well, but I appreciate what Tesla's trying to do.
But it also gives you confidence among the EV manufacturers that there would be some type of movement, a consortium to make sure that American drivers and international drivers know that the vehicles are safe, that there is a combined effort to make sure that there is more taking up of these types of vehicles as well here in the place of ICE or internal combustion engines. And for the 7,500 chargers from the supercharger and destination charger network that are going to be made available, that's going to happen by the end of 2024. So between now and then, who sees the biggest delta between the number of vehicles that they have sold in an electric capacity thus far between now and the end of 2024, and who is able to then have more of their customers take advantage of some of these Tesla charging networks. And for Tesla, what kind of multiple does this add on for them later on? Do you start to think about Tesla even more so as a power company that is able to then have all of these different stations where, yeah, their logos are on it, customers are interfacing with it one way or another, Tesla's going to get a cut?
Now, this is true, and for the record, I have actually modeled this out. If you've got access to my Tesla valuation model over on Patreon at the investor level and above, you can see my assumptions for not only Tesla supercharger profits for their own vehicles charging on their own network, but also for third-party vehicles charging on Tesla's supercharging network. In the end, this was inevitable. I've been saying it for years since the start of this channel. Other automakers may as well just give the fuck up on even thinking about making their own charging networks and just license access to Teslas. This is exactly what's happening. And by the way, stunningly, the people who control President Biden actually wrote a tweet today in which they tagged both Elon Musk and Tesla making this announcement. Once again, I'd just like to congratulate Mary for leading and mattering. You did it, Mary. Here's the original tweet. Quote, "In building our EV charging network, we have to ensure that as many chargers work for as many drivers as possible. To that end, Elon Musk will open a big part of Tesla's network up to all drivers. That's a big deal, and it'll make a big difference." This is true. Curiously though, the initial line here in this tweet, in building our EV charging network, as in building the United States EV charging network, is it just me, or does it sound like the people who control Biden are suggesting that their administration and or America in general are building their own charging network? This is just not true. There's Electrify My Asshole, which is the result of the Dieselgate scandal, and for those who've never used Electrify My Asshole, good luck finding a charger that works. What's really happened here, Tesla has literally, single-handedly built a comprehensive charging network throughout the United States and globally. And now Tesla, because it aligns with their mission, is opening up this network. There aren't going to be that many Tesla owners who are thrilled about this decision. Wow, there's always too long of a line at the supercharger networks as it is. Now there's going to be non-Teslas. F*** you, Elon. I get it, they'll be mad. But Tesla's mission is to accelerate the world's transition to sustainable energy. It's nearly a decade ago that Tesla open sourced their patents. Said anyone can use these as long as it's fair and reasonable. Here's all our tech. Please make some EVs. Compete with us, please. This is another example, a very selfless act from Tesla that's actually going to damage them in the short term in the eyes of many Tesla consumers. But it's the right thing as far as their mission goes. Good to hear the people who control Biden acknowledging Elon Musk and Tesla for the first time publicly. Very impressive. Ultimately, this is good for EV adoption in the United States, so everybody wins, apart from select Tesla owners in some of the busier locations who may temporarily have to wait a little bit longer to charge their vehicles. Third-party users charging on Tesla's network creates more revenue for Tesla to build out more superchargers. So opening up their network, I think in the long term, will actually be financially beneficial to the business, but there may be a little bit of short-term pain along the way.
Of that charging
Well,
feature.
they'd like to think of themselves as an energy company, right? When you talk about Solar City and that offering. I also don't know how much it's going to cost Tesla to I think they have to retrofit. I might be wrong about this, but their charging standard is different than the other cars. So do they have to retrofit some of these? I'm not entirely clear on that.
Now, I don't know for sure, but I'll be stunned if Tesla's doing anything other than the bare minimum to allow these third-party EVs to use their charging network. Just imagine the gall of a company to crawl to Tesla on their hands and knees, begging for access to their charging network, to give them a hope of surviving the EV transition. One less thing to worry about, one less thing to do. Coming to Tesla in a position of utter weakness, and then pushing Tesla around, wanting Tesla to make it easier for you. Unlikely. But stranger things have happened.
I just hope it's not like phones where the dongle is different every few years.
Well, the infrastructure needs to come just a long way. And I look no further than my trip to Target a couple weekends ago. There's, let's say, 600 cars in the parking lot on a Saturday morning and 5 Tesla charging stations in this parking lot away from the store. So it just goes to show you, at some point, those 500 or 600 cars are probably electric, meaning you're going to need a lot more charging stations, not just in the Target parking lot, everywhere, and in gas stations too.
Were people plugged in?
Nobody was plugged in. I've yet to see many people use this particular these charging stations at this Target. Now, it's just one location. Of course, I've seen people take their Teslas and go to other parking lots, but I mean, it goes to show, it says a lot about the infrastructure and where it needs to get to.
That's going to be the bigger campaign. It has to be as easy as putting gas in your engine is right now.
Yep.
This is true, although we do need to point out the obvious. The vast majority of people who own an electric vehicle will be parking it at home, in a home that has electricity. Bear with me here, folks, it's very complicated. That electricity that's already running to their home can charge their electric vehicle at home, which in my opinion is marginally less of a hassle than having to go to a fucking gas station. I'm just saying. Of course, on long road trips, you will need to stop over at a supercharger, but that is the vast minority of miles driven anywhere on Earth. Most people are making short trips. Most people park their vehicle at home, and most people, therefore, if they have a home that has electricity that their vehicle's parked in, can be charging it while they're asleep every night, making the necessity of trips to a supercharger extremely rare. I'd just like to introduce you to a friend of mine on screen now. His name is Derp. Derp is very intelligent. Derp sold Tesla stock near 2-year lows, expecting to buy back under $60 per share. So far, this plan has not yet worked out for Derp, but never mind. Derp knows how to read charts and do technical analysis, which isn't astrology for stocks. Derp's always right. Derp always calls the top and the bottom. Derp is a true genius trader, and that's why Derp is the world's first quintillionaire. Derp sometimes watches my YouTube channel, but despite me dropping repeated hints, Derp believes that Derp is performing and feeling Derp's best, so Derp decides that there's no point trying Athletic Greens AG1 because Derp doesn't have any nutritional gaps, couldn't benefit from 75 high-quality vitamins, minerals and nutrients, probiotics, prebiotics, adaptogens and enzymes to help with digestion. Derp is literally flawless and feels perfect all the time, so Derp needs no help. Derp certainly doesn't want a free 1-year supply of vitamin D3 and K2 because Derp feels perfect all the time. However, I'd like to introduce you to a second friend of mine and occasional viewer of this YouTube channel. On screen now is my friend who I only know as BBE. I'm not sure what that stands for, haven't been able to figure that one out yet, but BBE, for some reason, doesn't think Tesla stock is going to $69 per share or lower. And in fact, while many were panic selling near 2-year lows expecting the stock to go lower, BBE was buying with every spare cent. BBE prides himself on having a brain and being able to use it. BBE also wants BBE's brain to work as well as possible, as often as possible, and that's why BBE takes Athletic Greens AG1 every morning and absolutely swears by it, and I can understand why. So if you'd like to be a little more like BBE and a little less like Derp, use a link in the pinned comment or head to athleticgreens.com/SMR. There's a 90-day money-back guarantee. You'll get a free 1-year supply of vitamin D3 and K2, and if your experience is anything like mine and BBE's, within a few weeks you'll be feeling and performing your best. And finally, don't forget, if you'd like to unlock over 290 exclusive videos, plus my Tesla valuation model, which is optional to investor supporters and above, which includes my estimates for Tesla's supercharger network, including third-party access, join Patreon with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.